With the UK budget on the 16th of March, the Chancellor of the Exchequer, George Osborne, has a difficult task of adjusting the country's balance sheet, knowing that if the UK's EU referendum on the 23rd of June turns out in favour of a Brexit, the fiscal landscape could be very different. Alastair McCaig joins us now. First of all, the budget on the 16th, what are we expecting?
Well, I think broadly speaking, it's going to be difficult for the Chancellor to go wholeheartedly down the road of decisions that he would have liked to have done, regardless of his public persona in regards to positivity that we will remain in the EU. He'll be conscious there is certainly a chance that we will vote to move out of it and maybe won't do everything that he might otherwise have wanted to do. Also worth noting, of course, that we're a year now effectively into a 5-year turnaround plan to ensure that we have a surplus on the budget going forwards. That's going to be a difficult task. So what might we see? Well, I think tax is definitely going to be one of the areas in the pension arena that will come into play. And there's tax bans at the moment of 20%, 40%, 45%. There is a lot of speculation. We're going to see that cut down to just one band of 33%. That's far from a guarantee, but there's a lot of expectations we might see something like that. This is the end of an 8-month review that the Chancellor had embarked upon or contracted out to embark upon. So he certainly is going to look to make changes. That could be one of them. I think also the allowance could be another area which we see maybe being chopped from £40,000 down to possibly £25,000. That could well be another area that comes under the remit. Other areas that we think might come into play, the buy-to-let arena. We've already seen changes there with the fact that the interest rates are going to remain as low as they are for some considerable time, and that could be well over a year still before we start to see interest rates rise. He might feel that this is a time where he can afford to put some tweaks, some changes in as far as stamp duty is concerned. We've already seen a 3% increase going to come into play from April. There could well be further changes there. Other areas where we might see changes, tax as far as fuel charges are concerned, petrol pump costs, that's been basically frozen for the last 4 years, with oil prices being as low as they are and the cost of the petrol at the pumps as low as it is at the moment. This might be a time for him to start to integrate that back into the system, so we may well finally see further taxation, but it's worth remembering that about 73% of the price of a litre of petrol is already tax. And that could well increase. I think Lloyd's, referencing that, may well come into play as well, although the share price is going to be the leading indicator as to when that IPO finally goes through and when we finally extract ourselves as the UK taxpayer overseeing Lloyd's. But I guess the other area, a lot more uncertainty, would be budgetary cuts, and there will be further cuts, especially when I say that we're a year into that 5-year surplus plan, and we haven't seen as much taxation. More broadly speaking, of course, and we referenced the Brexit there right at the beginning, the bottom line is that this is creating 4 months worth of uncertainty and stagnation as far as the UK economy is concerned. Maybe just the initial ripples of this are being felt in the likes of the services PMI data. But as corporations feel unable to plough ahead with business planning for the short to medium term, we will see the consequences being more fully factored in.
So how constrained is Osborne going to be when he stands up to deliver his budget, knowing, as I said, the fiscal landscape could be very different in 3 months' time?
At the back of his mind he'll be conscious of the fact that he might have to aggressively backtrack less than 6 months down the road if the UK were to vote to leave the EU. He would need to go right back to the drawing board. The strength of sterling would again be aggressively hit. We've already seen it being hit, but currently against, say, cable, for instance, sterling US dollar back floating around that 140 level. Should we vote to leave, I think we'll see sterling weakness really kick in again, and we'll see fresh legs down to about that 135 area. That will affect many things. Import, export will be affected. The taxation on the back of that will come into the equation. The housing market potentially will be affected too. So there are a lot of consequences as far as the budget is concerned. So he'll be conscious that anything he says now, he may be in a situation where he's going to have to backtrack aggressively less than 6 months down the road.
OK, all right, thanks so much indeed. That's the budget on the 16th of March, and of course looking further ahead, that EU referendum for the Brexit vote on the 23rd of June.